After?
Registering that.
After?
Registering for the video conference.
Then you will be called.
Because there are nothing, only name, address, and phone number. That's all.
No contact number?
Yeah, name, phone, everything. Field person, they will call.
Here, not here. For you only.
Because there was two options like where to be seen and which branch. They asked two times which branch I click no and where to be viewed.
You check. Friends, please settle down. Friends, please keep quiet. We have only 50 minutes more. Please settle down. We have a target of 3 questions per. Listen. Departmental accounts. Like branch, department is also a business expansion activity. Expanding the business to various places in the form of branch. Expanding the business at the same place with entering into new products, services, departments. Are you following this? We used to call that, see the branch, expansion of business under different roof is branch. And the expansion under the same roof is department. So it can be in different products or it can be different services, different process, or in any form. The departments can be divided in a business. A business enterprise prepares its financial statements for the overall business for external reporting. It will never prepare product-wise financial statement. It prepares only the business as a whole. Even we have branch-wise information, but generally we don't have the department-wise informations available. So, when a business which is in a very small level, the entire control in a single hand, and when the business grows, control is delegated, the power, authority, responsibility is delegated. Are you following this? So when this authority and responsibility got delegated, we should be knowing whether the usage of such authority and responsibility giving the required desired results to the business enterprise. In other words, we have to evaluate the performance of each of the department's management or manager. Everybody? Thus, there is a need for finding departmental wise profit or loss. There is a need for finding departmental wise profit or loss. Understood? Please respond, friends. So, from the overall general discussion to the specific discussion, in a business enterprise, Even though we have different products, we prepare financial statements as a whole. We never report that this product generated this much sales, this much purchases, this is the profit. Like that, each and every product we don't report. But to measure the performance of each product, to take key decision such as whether to continue the product, to make improvise on the product, to discontinue the product, for such decision making, I want the individual performance of that product. Thus, need for preparation of departmental final accounts, that is trading and P&L. So through this chapter, it's not a very complex chapter like what we had in branch. The just area of this topic is preparation of departmental final accounts, trading, P&L and balance sheet for the departments, and not even balance sheet. We will be focusing mainly on to only preparation of trading and P&L account for the departments. Are you following this? Is it for reporting purpose? Is it for external reporting purpose? Absolutely no. It is to evaluate performance, to take key decision. There are the two objectives, twin objective of departmental final accounts. One, evaluating the performance of management. Even it is performing well, even if you have decided to continue or discontinue, but I want to know the performance of the management to fix their remuneration. Some department managers so efficient, you should give more remuneration. Some department less efficient, so either you should remove them or you should give less remuneration to them. Could you appreciate that? So that way, the twin objective of preparing departmental final accounts is that evaluating performance, taking key decision of continuance or discontinuance of a product. Shall we? Okay. Now, what is the difficulty there, sir, in the preparation of departmental trading P&L? What is the difficulty, or what is the uniqueness rather than difficulty? So, we have already understood through our discussion so far of 5 minutes. What is the need for this chapter? In this chapter, what do we do? Prepare final accounts of. Why should we do? Already decided. Correct? Now, how should we do is what we are going to discuss, and that is what is throughout the topic. Shall we? Everybody. So, the difficulty is, or uniqueness is that many expenses are incurred common for various departments. Lot of expenses are incurred on common basis. So what we are going to learn through this topic is apportionment of expenses. In costing, many chapters you do the same activity, ABC, overheads, all these things, same activity only you are going to do. Correct? Similar performance only, similar activity only you are going to take here also. Apportionment of the common cost into various departments. Everybody, it is a normal final accounts, but the uniqueness is that we should take some, we should do some working to apportion the common cost to various departments. So, two uniqueness, special aspect of this final accounts. Otherwise, normal final accounts, trading account, P&L, balance sheet. Trading, you will have opening stock, purchases, sales, closing stock. Normal trading, we are not going to have in the debit side sales like the department, debit side sales, like that we don't record. Correct? Normal trading and with the different columns for various departments, and we are going to prepare the overall, the departmental trading P&L. Understood? The unique feature is that apportionment of common cost to various departments, for which the basis of apportionment will be indicated in the problem in somehow. Correct? As you identify the cost driver in costing and all, here everything will be indicated. Correct? Electricity charges is there. They themselves will give the switch point. Are you following? Or the room rent, they will give the floor space. If it is salary, they will give number of employees. You can easily identify which to be used for what expenses. Understood? So that way, just simple mathematics, arithmetics only involved in the chapter called simple area, very simple area. Understood? Just throughout final accounts. Shall we? Okay. So apportionment of common cost to various departments. Another thing is elimination of unrealized profits in case of interdepartmental transfers at profit. Elimination of unrealized profits in case of interdepartmental transfer at profits. So what is this, sir? So we understand one department may transfer goods to another department. Even though each department may have sales with outsiders, there could be a possibility they are also supplying goods to another department. Please respond. Is it profit for the business? No, absolutely not. One department transferring department A, transferring goods to department is absolutely not a profit. But they will book profit. Why means, otherwise there is no way you can measure the performance of department A. Department A efficient and transferring goods to department B not efficient, not making sales properly. Respond. Because of this, now what happens? If you are not booking profit for department A, then it will be showing that A and B both are inefficient. But actually department A was efficient. It did that duties, whatever activities given has been efficiently performed by department A. Department A staff has been highly efficient. But department B's inefficiency, department A also may be branded as inefficient. So thereby when department A transfer goods to department, it may be taking place at a profit. I am not telling it should. Are you following? So there could be a transfers taking place with at cost price also. Correct? If the inter-departmental transfer taking place at profit, then there is something called elimination of. A transferred goods 100 rupees to B for 120. B sold the goods for 150. A booked 20 rupees profit. B booked 30 rupees profit. Everybody. So in that case, it is okay. But A transferred the goods at 120. A profit of 20 is booked. B have not sold the goods. Respond. So B's cost is so B would have shown that as closing stock. So no profit is booked by B. A booked profit. This profit is called unrealized profit. This profit is called such unrealized profit shall be eliminated. So it is depending upon it is based on the closing stock, transferred closing stock which are lying unsold. Correct? Everybody. So based on that you should find out unrealized profit. Such unrealized profit shall be eliminated. So you should measure the unrealized profit and it shall be eliminated. In which department? A department or B department? Transferor department or transferee department? That profit margin is included in whose stock? Transferee stock. So thereby it should be eliminated from which department? Not transferee. It is from not transferor, from general P&L, from the overall business. Are you following? If you are going to eliminate from transferor, then the purpose of sending the goods at itself is getting defeated. You transfer 100 rupees for 120 was not sold by. Now, if you are going to eliminate the 20 rupees from department A, then the basic purpose of booking profit here is defeated. So you book the profit for A20 and book the overall profit of the business and eliminate the unrealized profit from overall profit of all the department concerned. Don't deduct from any concerned department. So unrealized profit will not be eliminated from any department. It will be eliminated from overall profit. We call that place of elimination as general P&L. So first we will prepare departmental trading. Then we will prepare departmental P&L. We will arrive at departmental net profit. Bring all the profits to general P&L where you don't have separate column for department. Total all the profits. Eliminate unrealized profit. It's an unrealized for the business. Everybody. But for department A concern, it is a profit. Are you following? So there are two key areas only in the departmental accounts. First, basically the topic is preparation of final accounts. Is like two key area. What is that? Apportionment of common cost to various departments. Then elimination of unrealized profits. Everybody. In case of interdepartmental, one department to taking place at a loaded price, profit margin. Could you appreciate that? If the department transferring only at cost price, there is no concept of unrealized profit. There could be a scenario where department transfer taking only at cost price. Then there is no such unrealized profit. Everybody, which chapter? What is the topic all about? Why should you prepare department final accounts separately? Anyway, you are going to find out the profit of the business. This is going to be reported to outsiders. This is for the internal decision making. Twin objective. Evaluating the performance of the departments. Taking key decision of continuance or discontinuance of departments. Correct? For that we should prepare departmental final accounts. Knowing departmental profit or loss. Correct? Sorry. Now what is the uniqueness in that? Common cost apportionment. And then elimination of unrealized profits. Understood? Unrealized profit arises only when there is interdepartment transfer. That too at profit. If A sell only to outsiders, B sell only to outsiders at a profit, then there is no question of unrealized profit. Are you following? Sorry. If this unrealized profit is there, it should be eliminated from which department? Transfer of department or transferee department? General P&L. So if at all they ask you departmental trading and P&L, it implies they are also asking you general P&L. You should not tell, sir, not question, they didn't ask you. They will not ask you. If the question is department trading P&L, it implies you should also prepare what? General P&L. So these are all the various basic discussions. Shall we proceed? Everybody? Apportionment of expenses, unrealized profit. Unrealized profit will be computed based on whose stock? Transferee stock or transferor stock? Transferee stock. Correct? In transferee stock only profit margin is included. Correct? Based on the margin booked by transferee or transferor? Transferor. Take the transferee stock, book, apply the margin applied by transferor and find out the stock reserve. Which will be debited? Correct? In general, suppose there is opening stock now, you find out opening stock reserve which will be credited in general P&L. So what stock reserve you are removing in this year will become profit in the next year. The same concept what we discussed in branch and other chapters. Are you following? So thereby in your general P&L, by stock reserve, by profits of departments to stock reserve. By stock reserve, which stock reserve? Opening stock reserve. Then by various profits of departments, profits of various departments. Then to stock reserve, you will get net profit of the business.